Jerome Powell spoke today and stocks closed at a new record high. What's been so incredible is that when we hit the top and the bottom of this channel, if it keeps up and we hit this next number here, which is going to be at the top of the channel, we're going to get to 530 on SPY. This is incredible. We're going to talk about what the 68% number we talked about in the video suggests. We're also going to go through and look at the key takeaways from Jerome Powell's FOMC meeting today. And really, what this really means is that we want to come back and look at the S&P 500 because this has been a pattern we've been talking about for a while. So if you want to watch all the way till the end, I will make sure I update you on all the key charts, like the S&P closing at a new record high, QQQ finding some support here on our channel, same thing we talked about yesterday. And then the last chart, which is really important here, is currently NVDA, which is set for a hollow candle if we can close above roughly 904 on the weekly chart. Everything looks really bullish. So after Jerome Powell spoke, there is currently a 68.3% chance of a Fed cut in June. That's what the 60% chance of what happens next means. What this also means is that they are penciling in 3 rate cuts for 2024. Basically what was already there. The market is happy and is starting to price in June. There were some dots that went lower, but again, we're looking at the FOMC as a committee, not for individual participants. Powell says Fed's inflation view stays unchanged despite recent data, which means that uptick in inflation. Key rate unchanged as FOMC awaits confidence in inflation. Powell says appropriate to slow QT fairly soon. And they also boost economic growth forecasts through 2026. So what this really means for me and the way that I'm reading this, again, it's just my interpretation is that hey, we couldn't have really seen what happened with AI, but productivity gains are good, which means that we're seeing higher GDP than we would have otherwise. Right now, we're still looking for 2% GDP going into the first quarter, and this is likely higher than we would have thought. Why? Well, we didn't see things like Sora. We didn't see things like the new ChatGPT or the Firefly. I think it was Firefly bot or whatever, right? All these other applications, the humanoid robots. So I don't think Jerome Powell saw that coming either. So the Fed overall is saying that, hey, we're going to get back to 2%. Might just take a little bit longer, and we're willing to do that. Still penciling 3 cuts means that, hey, they're basically declaring victory. That's the story here. And the market took the cue to go risk on. We're now here to 73 on fear and greed. And as we know, there ain't no party like the bull party. So who was leading the party today? Well, it was AVGO. It was, what's this company here? Oh, Boeing. Oh, my goodness. Boeing's catching a bid. Tesla's catching a bid. Ford is catching a bid. GM is catching a bid. And then we even saw a potential buyout for Paramount. That crossed just before the close. Triple M also making a move here. Market looks good. It looks happy. I'm going to ask you for a huge favor. If you could please consider smashing the thumbs up or subscribing to the channel, I would greatly, greatly appreciate that. The audience has been such a big support, and I really appreciate that. Thank you so much. So in terms of the key data for the week, it's now over. So we got here to all the important data so far, basically European CPI, Jensen at GTC. We got Jensen Huang again today. No headlines out of that, at least that I saw. Jerome Powell's done, so that's it. We got PMI and jobless claims tomorrow, but I think we have less things to worry about than before, which is the reason why the market's actually pushing up. We also provide you with these key levels every week, and we've made it all the way here to resistance 3, which means we printed a weekly higher high, and we're now actually at a new all-time high. So as much as we talk about these patterns here, and again, I might regret saying this because on Friday, everything can change at 4 o'clock. What we're looking at here is going to be the weekly chart. And what's really important is that right now, we don't even have a lower low, right? We got low, higher low, higher low. We've not yet actually even broke it. QQQ did slam down. This one here looks a little bit more bearish, and we have 2 lower lows, which means that we're starting to see a trend. It's not confirmed yet, though. That would be on the last candle, which we've not seen yet. So what did we do? We slammed down to support and we bounced within 15 cents. Same thing that happened here, same thing that happened here, the same thing that actually happened a lot of times on this most recent move. So what does this really mean? Well, let's go back to our notes here because we gave you these notes on the weekend. We talked about how I thought up into the first half of the week and then down into the second half of the week. But what's interesting here is that we actually got that for the S&P, but for the NASDAQ, as I'm just showing you here, we got the opposite move where we went down into the first half of the week, testing that weekly higher low. And now halfway through the week, at least we're higher. Where's the second half of the week going to go? I'm not sure. But as of right now, we continue to be overbought on the S&P, on the Dow Jones, on the Russell, because all of these inverse signals just keep remaining there. because we've not yet had confirmation of a trend change, which means all we're getting so far are warnings. We're just getting warnings. And remember, the number one stock that we want to pay attention to know what's happening really with fear and greed is going to, with momentum is going to be NVDA, looking at a hollow candle. And a hollow candle just means that we're closing higher than the previous session. And ever since we started this big expansion here on this AI hype, it's been nonstop green candles with increasing volume, which is textbook bullish. So if the pattern's going to complete, we need to be higher than 903.88 on Friday close in order to get that hollow candle. So that's really what I'm looking for here. It's pretty simple. And otherwise, we talked about how NVDA was going to be imported into the first couple of days of the week, and then we shifted gears to Jerome. And no real headlines here. This is excellent. Remember, we don't actually want to see a pivot. We want to see a pause, because a pause means that the Fed currently has things under control. And what that means is that we don't have to worry, at least for now, that recession might follow. What do we have? We have more continued strength, where higher lows and higher highs imply we're going to keep going higher. And at least until the end of April, if we keep seeing that pattern complete. There was one more thing I wanted to point out here, though. Maybe it's in the previous weekly one. Sorry for not having this prepared ahead of time. It was it's when the Fed cuts. Where is this thing? Let me see if I can find it here. Shouldn't be too much longer. Here we go. So every little line right here is a recession. So when the Fed pivots, it's usually a big decline after. So, hey, I'm happy to be right here. I'm happy with a pause. I'm happy they're not pivoting. Why? Only 1990 was the only time where they pivoted and we didn't get a massive drop. So that's what's really important for me. Finally, if we now look here at a few more key charts, now that we have this data out of the way, what would I expect to see? Well, I would expect to see Bitcoin putting in a big pump. Yeah, it is. It's up 9%. It's reversing yesterday's move. We'll see if it can actually print a higher high going into tomorrow. Ether, pretty much the same story. It's down by 25% off its high. Strong bounce off the 50 DMA. I want to see if we can break the trend and actually form some higher highs here. Next thing I would look at would be the Russell. Russell's up by 2% today. It's pumping, baby. Whoop. Yep, because 10-year note is down, or long-term inflation expectations and cost of borrowing is down. VIX is down to 13. It got a stomp today, down by 5.8%. And the dollar also got a dump. We got a bearish engulfing daily candle closing below the low and below the 50 and 200 DMA, which is all bearish, which means bullish for stocks. And then finally, the NASDAQ is now back above its previous monthly candle high, which means that if we go here to our cheat sheet, what do we note? Let's go back here to the dots we were talking about. The S&P is now back above 511, or has two green lights, and the QQQ is now getting back above 441, which means that as of right now, the market looks very resilient. And there's some warning signs out there, but there's always warnings. If you want more information, watch the weekend deep dive now over here on the left-hand side. If not, I will see you at 9:15 Eastern tomorrow for the stream. Thanks so much. I'll see you tomorrow.